Kenya is hoping to draw more visitors after the tourism drought that followed the violence-prone 2008 elections and the global credit crisis of 2009. There are signs that tourism is starting to pick up again, and one luxury resort group in East Africa is hoping to prepare for that. Yesterday, shareholders approved a plan to raise more cash for expansion plans through a rights issue.
Shareholders of TPS Eastern Africa Limited, owners of Serena Hotels, have approved a plan to raise over 1.2 billion shillings through a rights issue at the Nairobi Stock Exchange. This is to drive an ambitious regional expansion plan.
Some of the projects that we intend to implement with this cash is the purchase of 2 luxury properties in southern Tanzania, which is in the Selous National Park. We are also going to be purchasing a unit in Arusha, which we currently only manage, and a luxury tented camp in Serengeti, which we also manage, but the owners have decided to sell, so we'd like to purchase those units. And by establishing a strong presence in Arusha, which is perhaps the future center for the East African community, it is very important for us to be there.
The board of directors were authorized to issue 24,701,774 new shares at a rate of 1 share for every 5 held, and the company will now await the regulatory approvals from the Capital Markets Authority and the Nairobi Stock Exchange.
We are hoping that we will receive the approvals in a timely manner. There is no reason why we shouldn't. We are hoping that we will be able to launch the rights issue sometime towards the end of June, and to have the cash by the end of August.
Definitely, it's one of the important capital raising schemes going on this year in the market, and definitely it's a good move for what TPS intends to do with the money. They've stated that they want to acquire some hotels in Tanzania and also develop some of the lodges and tented camps in Kenya.
Serena runs 23 luxury hotels, resorts, safari lodges and tented camps in Uganda, Tanzania, Zanzibar, Mozambique, Kenya and Rwanda. Analysts feel the company is positioning itself strategically to enhance its market leadership in the region.
We stand to benefit because they want to raise money to build up the business. And when the business is built up, then we expect the country to do well and the share price to go up.
The expectations of the rights issue is that there is a very high probability that the issue will be successful, because going by the current market conditions, it's very likely that the amount of money can be raised, and we don't know yet whether the current shareholders intend to take up all their rights. So it will be really dependent on what existing shareholders decide, and the market conditions that will allow successful take-up of rights.
And with things looking up for Kenya's economy, which is likely to grow by about 4.5% this year, it is expected the funds raised from the issue will provide an optimum opportunity for the company to derive considerable benefits from its investments.